The Nigerian Stock Exchange lies at the heart of the Nigerian economy, providing securities trading for the Nigerian capital markets ranging from office listing, licensing services, market data solutions, to technologically enabled trading platforms. Since September 1960, this exchange that has been founded has been a major pioneering institution, achieving several firsts in history. And there are quite a number of them. And I think everybody that is here knows those firsts better than I do. But I want to just mention a few of the achievements of this stock exchange. The more recent ones are the pioneering increased access of real estate and infrastructure funds by creating mortgage companies' equity subsector in 2016, admitting the first real estate investment trust on the daily official listing of the exchange in February 2018, and also hosting the first REITs conference in May 2017. Federal government Ijara Sukuk in April 2018, and since then we've done a second Sukuk, and we're planning a third in the next few months. We've also launched on this exchange Africa's as well as Nigeria's first ever sovereign green bond in the sum of 10.68 billion naira in July 2018. It is this entrepreneurial spirit of the exchange that underscores the evolution that the exchange itself has gone through since inception. It is one of Africa's preferred hubs to save, and it is very often accessed and traded on by several investors across the region as well as globally. The NCA's history has not always been rosy. There has been some highs and some lows, highs when markets are bullish and lows when markets are bearish. Since the global meltdown in 2008, the all-share index trading volumes have declined from a high of 66,371.20 in March 2008 to a low of 20,000 in February 2019, and again in December 2011. I understand that the all-share index stood at 27,388.68 by the closing bell on the 21st of February 2020. The volatility in the domestic and capital markets since 2008 reflects the checkered record history of Nigeria's economic growth since that time. The high economic growth rates between 2008 and 2014 coincided with periods of relatively low inflation. Yes, shortly after this administration took over, the economy went into recession, with the real GDP growth contracting, and then we also saw very significant increase in inflation. But it is unclear how much of the previous growth that we have had during the preceding periods of exceptionally high oil prices was truly sustainable, truly inclusive, and truly diversified. To address this imbalance, our commitment as a government to achieve economic diversification has been at the heart of this administration's economic strategies under the Economic Recovery and Growth Plan, which was launched by Mr. President in April 2017. This medium-term development plan charted the trajectory for our economy to exit from recession and return to the path of growth. This administration remains committed to maintaining this growth as we transit from the ERGP to a longer-term successor economic development plan. And we have seen the results. As mentioned earlier by Mr. Oscar, growth in real GDP has been sustained now for 11 consecutive quarters, with a growth of 2.55% recorded in the fourth quarter of 2019. This is up from 2.28% in the third quarter of 2019, and the overall growth full year 2019 is 2.27%. When you compare this growth to 1.91% recorded in 2018, this reflects a good performance. Inflation also was very high during the period of recession. In January 2017, inflation rate was as high as 18.72%. This has trended downwards to 11.02% in August 2019, but I must say there has been an uptick, and as at the end of January, inflation is at 12.31%. This attenuation in the consumer price index was achieved through effective fiscal, monetary, and trade policy coordination. Our economic aspirations for the year 2020 are anchored in the 2020 budget. We are very grateful for the renewed partnership with the National Assembly, which has borne fruit and has facilitated the passage of the 2020 budget of 10.57 trillion on the 17th of December 2019, making it the first time in the past over 15 years that this has happened, that we are able to start a fiscal year from 1st of January. The 2020 fiscal year Thank you. The 2020 fiscal year has also witnessed another very notable first. On the 13th of January 2020, His Excellency, the President of the Federal Republic of Nigeria, assented into law the Finance Act of 2019, making this also the first major reform of our tax laws in the past 20 years. Specifically, the Finance Act 2019 is focused on promoting fiscal equity by mitigating instances of regressive taxation, reforming domestic tax laws to align with global best practice, tax incentives for investments in infrastructure as well as in the capital markets, supporting micro, small, and medium-sized businesses in line with our ease of doing business reforms, and last but not the least, raising revenues for government. In terms of raising revenues, you are all aware that the Finance Act 2019 has increased the VAT rate from 5% to 7.5%. This is with effect from 1st of February 2020. Given the recent revenue challenges faced by government, we were compelled to take this step to ensure increased funding for critical expenditures on health, on education, as well as on infrastructure. However, I would like to highlight some of the capital market reforms and tax incentives enacted in the Finance Act 2019 for regulated real estate investment trusts and also for security lending transactions.